Modest gains here, guys. Nasdaq's in the lead. Let's get to Bob Pisani. Hey, Bob.
Hello, Carl. Happy Wednesday, everybody. Mixed open today, 3-2 advancing to declining stocks. Take a look at the sectors. Oil's creeping back up again towards $41. That's helping energy out. The banks are mixed. Mixed reporting there. We'll get to that. Industrials, okay. Materials, healthcare a little bit on the downside. That's mixed here. All over the place. Goldman had a big beat on the earnings, just top line. Bank of America was about in line. PNC and U.S. Bancorp, I love watching the super regionals. They had good numbers overall here. The only one really light was Wells Fargo, and a lot of moving parts there. Net interest margin was on the light side, and they have a big mortgage division that's kind of all over the place. I just want to show you here about just generally what we know about the banks so far. Even with a mostly earnings beat and lower credit provisions, it's hard to move the stocks forward here. The credit provisions are definitely lower. Deposits are increasing. But the big question is, if you don't have a trading operation, how do you make money in your bank? You get loan growth, which is fairly tepid. You get a change in the net interest margin, and that's not happening. That's basically flat to lower. Or maybe fees. You can get them. They're up slightly for some of them because the mortgage applications are higher. That's why fees have been increasing. But look at Bancorp, U.S. Bancorp. They're in Minneapolis. This is a big commercial/consumer business. Very broad, very good company to look at to get an idea what the consumer and commercial loans are doing. Their average loans are down quarter over quarter. This is commercial is down. But look, you see all that residential mortgage increase? They've been doing gangbusters on the mortgages. We've been reporting that. Credit cards are generally up slightly higher as well, quarter over quarter. So there's a little bit of good news and a little bit of bad news there. The bad news is banks are going nowhere this year. The bank ETF is down 30%, folks. 30% year to date. That's the problem overall. Now, earnings are better than expected overall, but this whole Wall Street versus Main Street thing is still very much alive. And that's because there's a real difference in how the earnings are coming in here. So spending on goods is generally increased overall, but spending on services has decreased. Well, that's a big thing. Remember, Wall Street versus Main Street, services are a big part of the Main Street economy. Not so much on the Wall Street economy. Services as a percentage of U.S. economic activity is 83%, but it's only 50% or so of the S&P profits. So when you have skewed more towards production of goods than Main Street, production of goods are higher. This is all helping Wall Street. This is a main reason our profits are demanding why Wall Street seems to be doing better than Main Street overall. That's the important distinction. Of course, we have the mega cap names benefiting from work from home as well. More on the differences between Wall Street and Main Street and the earnings situation coming in at tradertalk.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.